Hey traders, Jason here from Levitt Brothers. This is just going to be a quick video to serve as a little friendly reminder not to hold into earnings during this particular earnings season. Okay, stocks tend to have a personality during earnings season, and oftentimes when stocks start beating, a lot of stocks beat, and you get to this mode of they beat, they gap up. If they don't beat, they gap down, but then they recover. In this particular earnings season, stocks that are beating are doing okay. Some doing very well, but if they don't beat or their guidance is less than expected, they're getting clobbered. And it's pretty, I don't want to say it's random, but it's pretty random. I know Facebook's done well. I know Microsoft's done well. But for the most part, earnings season has been pretty rough for a lot of stocks. So I'm going to go flip through them again. Quick video just to serve as a reminder not to hold through earnings. Here's ABBV. You can see it was one of the market's strongest stocks, printing a new high just a couple days ago, and today it's down almost 9% after earnings. ALGN, again, another one of those, one of the market's strongest stocks. Nice rounded bottom here, rallies up, huge gain, then was trading in a consolidation pattern here. It's still in that consolidation pattern, but much less attractive after an 11% drop today. ASGN, stock was already trending down. You could have argued, there's no way you should have been in the stock anyways, but it still serves as a reminder of, stocks that are down could go down even further. Stock broke down in early March, broke down again a couple days ago, and today is down another 8% or so after earnings. Aspen Technology down almost 25% after earnings. Just a few weeks ago, it was printing a multi-month high, acting fairly well, at least the price was. Whether it was tradable or not, that's another story, but it just serves as an example. If you don't hit your earnings, you're in trouble. You get punished. Crocs, one of the, very, very quietly, it's been one of the strongest stocks out there. Sometimes hard to trade because there's some chaotic movement here, but you cannot question the overall trend. I mean, even going back here, you had a breakout there. Trend line here, breakout, volume, good, fantastic, really good. Like volume good, price action good, everything is looking great. Today down 19% after earnings. Harley Davidson tried to move up in early February, but it's been all downhill since then. They had earnings. Earnings just came out. Stock is breaking down from a little symmetrical triangle pattern, tested the lows already. So again, nope, safe place to go if you don't beat on earnings. Mobileye, one of the market's strongest stocks, steadily trending up. Kind of chaotic movement. Okay, a little bit frustrating if you want to be in a more relaxing stock. Nevertheless, you can't deny that the stock has been steadily trending up, doing extremely well. Definitely, from a relative strength standpoint, was one of the market's strongest stocks. You can see it broke out last week, was in consolidation mode. Down over 20% today after earnings. MaxLinear, another stock that tried to move up earlier in the year and just couldn't do it. And no reason to be in the stock when earnings came out because the stock had already broken down, trending lower, below key moving averages, below key support levels. Nevertheless, serves as a reminder, stock's down more than 16% today after earnings. PI down almost 40%, okay? Not tradable, too chaotic for me. At least for me, this is way too chaotic. I would never trade a stock that was like this chaotic, but still, no question that it was a strong stock, moved from 75 up to up in the 150, up in the 140 area. So the stock had almost doubled over the last 6 months. And then today it's down, as I said, almost 40%. PRCT. So another stock, this stock was weak, trending down, rallies hard, got some pretty good earnings here, then consolidates above some key moving averages. The 50-day moving average is starting to flatten out. Everything is looking, pretty good here. Like if it can consolidate here, it can break out to the upside. Earnings came out today, down 18%. STM, not really tradable in my book, but still a good example of what's going on out there if stocks don't do well with earnings. Stock broke down a couple weeks ago, finding support at a previous low from back in January, and today it's down 8%. Wolf, No reason to be in the stock. Again, just serves as an example. Gets batted back by the 21, 21, 21, 21. Mostly, obviously just trending down. Today, down 18% after earnings. This all reminds me, this is going back a month or so. AEHR was one of the Wall Street's darlings. It was, trending up at new highs over here. Everyone's talking about it on Twitter. It was the can't miss stock. You had to be in it. Market cap was under $1 billion, so everyone was fantasizing about giant gains. What if it becomes a $2 or $3 or $4 billion company? You could 10x your money. And then they missed earnings over here, stock gap down, and the stock has continued to fall since then. Okay, there was no quick recovery. And then finally, the last one, another one of those Wall Street darlings. Everyone talking about it on Twitter. Everyone saying, this is one of the leading stocks, and it was from a relative strength standpoint, from a price advancement standpoint. Everything was doing fantastic with CRDO. Then they came out with earnings here in February, and you can see what happened. The stock got absolutely crushed, and it's continued to go down since then. Okay, so I know Microsoft did great after earnings. I know Facebook has done great after earnings. There are some outlier needle in a haystack examples. But there are many more stocks that have completely blown up after earnings. So if you're a long-term investor, fine, hold. You have to. You can't just sell every earnings season, okay? That's if you're a long-term investor. But if you're a trader, probably not a good idea to hold during this earnings season. So when you get into stock, know when earnings are coming out. Know that acts as pretty much like an expiration date. You got to be out by then. In fact, you might as well look at the earnings dates of competitors, because if UPS has earnings, then you probably don't want to hold FedEx either. Okay, be careful out there. This is not a really friendly environment to trade. Not a great earnings season to hold into. All right, we'll see you next time.